Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, February 12th. Dow Component and General Motors jumped 5% on Monday ahead of the company's fourth quarter earnings report. That move was prescient when taking a first look at GM's report, as the company posted an adjusted profit of $46 million, or 8 cents per share. That was well ahead of the first call consensus estimate that called for a loss of 55 cents per share. As it turns out, though, things are not what they appear to be. The adjusted profit included a $1.6 billion tax benefit in continuing operations that the company's CEO, Rick Wagoner, acknowledged analysts probably did not take into account when providing their estimates. Based on the number of shares outstanding, that benefit amounts to $2.82 per share. So what looks like some healthy upside at first glance is really a substantive miss relative to the consensus estimate. The market, of course, is well aware that GM has its problems. Its stock, however, was still up 9% for the year ahead of its results. It would be remiss not to add that shares of GM plummeted 51% from their October high of $43.20 to their January low of $21.34. Its outperformance thus far has been driven by a sense that the stock got oversold and the belief that GM is poised to deliver better results down the road due to its restructuring activity and the stimulating effects provided by monetary and fiscal policy. In terms of its actual performance, GM's North American business continues to be a major drag. In the fourth quarter, GM North America registered an adjusted loss before taxes of $1.1 billion on a 1.4% decline in revenue to $28.1 billion. The good news is that GM actually showed some improvement on a full-year basis, as it lost only $1.5 billion before taxes versus $1.6 billion in 2006. Fortunately, the company's international operations are prospering. GM Europe incurred an adjusted loss of $215 million in the fourth quarter due to a slow German market and unfavorable foreign exchange rates, but still managed an adjusted profit of $55 million for the full year on an 8.9% increase in sales. GM Latin America, Africa, Middle East, and GM Asia Pacific were its strongest areas. The former delivered $1.3 billion in adjusted earnings on a 19% jump in sales for 2007, while the latter achieved $744 million in adjusted earnings on a 35% surge in revenue in 2007. General Motors' 49% equity interest in GMAC left it exposed to the problems of the housing market. For the full year, GM reported a $1.1 billion net loss attributable to GMAC. The GMAC business, however, is expected to be profitable in 2008. As for General Motors, it is expecting improved pre-tax automotive earnings in 2008, due primarily to continued strength in emerging markets. Separately, in its ongoing effort to extract further cost savings so that it can be more competitive and profitable over the long term, GM offered buyout packages to all 74,000 of its UAW members. The drive to lower its production costs is a necessary undertaking, given the heightened competition from foreign rivals. It is the right thing to do, yet it underscores that a lot still needs to be done at GM to get back to profitability. In the meantime, we'd expect the stock to ebb and flow with the tide of sentiment on the economic outlook. I'm Pat O'Hare for Briefing.com. Thanks for listening.